$50,000 per week. Sounds impossible? That's exactly what I thought until I lost $50,000 on Memecoins last year. But that loss taught me something nobody talks about. I discovered a hidden pattern that big traders use to spot viral meme coins days before they explode. In the last month alone, I turned $1,000 into $47,000 using just 2 simple tools. No complex trading, no insider info, just pure strategy that anyone can copy. Want to know how? I'll show you exactly how I do it. Let's talk about the real reason most traders fail at catching early meme coins. It's not about fancy tools or secret Discord groups. It's all about understanding market psychology. I've made over $50,000 in the past week alone by focusing on one simple truth. The biggest gains happen when you spot trends before they become trends. Here's what nobody tells you about Memecoin psychology. The market moves in 4 distinct phases. Phase 1 is the stealth accumulation, happening between $200,000 and $1 million market cap. This is where smart money quietly builds positions. They're not buying all at once. They're slowly accumulating across multiple wallets. This creates a pattern of small, consistent buys that most traders miss. During Phase 2, between 1 million and 5 million market cap, early trend spotters start noticing the coin. This is where you'll see the first real volume spike. Most traders make the fatal mistake of FOMOing in here at the first big green candle. Instead, this is where you need to watch holder behavior. Are early wallets dumping? Are new wallets coming in? These metrics tell you if it's a pump and dump or the start of a real trend. The sweet spot for entry is actually during the first major pullback after the initial pump. Why? Because this is when weak hands get shaken out, but smart money stays in. I look for pullbacks between 40 to 60% from the peak. If the holder count keeps increasing during the pullback, that's your golden entry signal. But here's what really separates winners from losers in memecoin trading: position sizing and psychology. Never risk more than 1% of your portfolio on any single memecoin, no matter how convinced you are. This isn't about finding 100x gain. It's about consistently catching 5x to 10x moves while managing your risk. The psychological aspect is crucial. You need to remove emotion from your trading completely. Set your take profit levels before you enter the trade. I typically take 25% profit at 2x. Another 25% at 5x, and let the rest ride with a trailing stop loss. This way, you're playing with house money as the coin continues to climb. Think about it this way. Every massive meme coin started as a small cap. Pepe, Shab, Doge, they all followed this exact pattern. The difference between traders who make life-changing money and those who lose everything is simple. The winners understand market psychology and stick to their strategy, while the losers chase green candles and FOMO into pumps. Remember, market psychology moves in cycles. After a major meme coin season, most new projects will fail. That's when you need to be patient and wait for the next cycle to begin. Watch for increasing volume across the entire memecoin sector. This usually signals the start of a new trend. Success in memecoin trading comes down to using the right tools at the right time. Let me break down my exact setup that's generating consistent profits. First, you need Dex Screener, but not how most people use it. Here's my precise filter setup that took months to perfect. Set your market cap range from $200,000 to $11 million. Anything below $200,000 is usually a scam, and anything above $11 million has already pumped too much. Set your 1-hour volume minimum to $30,000. This eliminates dead coins and bot trading. But here's the key: sort by 5-minute gains. This shows you what's moving right now, not what pumped yesterday. Next, you need a trading bot for execution. I use a custom setup that monitors wallet movements of known successful traders. When multiple successful wallets start buying the same coin, that's a strong signal. But don't blindly follow. Always check the liquidity and holder distribution first. For liquidity analysis, look for at least $50,000 in locked liquidity that's locked for 30+ days. Check the holder distribution. You want to see at least 100 holders with no single wallet holding more than 5% except for the liquidity pool. Use rug check to verify the contract hasn't been copied from known scams. Token sniping tools are essential, but most people use them wrong. Don't try to snipe every new token. Instead, use them to monitor buying patterns. When you see consistent buying pressure from multiple different wallets, not just one big buyer, that's your signal to dig deeper. The most powerful tool in your arsenal is a good trading journal. Track every trade, including entry price, market cap at entry, volume at entry, and time of day. Look for patterns in your successful trades. You'll start to notice that certain market cap ranges and volume patterns consistently lead to profitable trades. For chart analysis, forget traditional indicators like RSI or MACD. In memecoin trading, Volume is your most reliable indicator. Use a volume profile indicator to identify key levels where previous trading activity was highest. These levels often act as support and resistance. Set up multiple monitors if possible. Have Dex Screener on one screen, your trading bot on another, and your chart analysis on a third. This allows you to spot opportunities faster and execute trades more efficiently. Time is crucial in Memecoin trading. Being just 30 seconds late can mean missing a 2x pump. Twitter is another essential tool, but not for finding coins. It's for confirming trends. When you see a coin you're watching start trending on crypto Twitter, that's often your signal to start taking profits. The masses are usually late to the party. Mastering chart analysis for Memecoins requires forgetting everything you know about traditional technical analysis. These charts move differently, and understanding these patterns is crucial for success. Let's break down the exact strategy that's working right now. First, identify the market structure. Look for what I call the triple tap pattern. 3 consecutive pumps with higher lows between each pump. This shows accumulation by smart money. Most traders miss this because they're only looking at 1-minute charts. You need to watch both 1-minute and 15-minute timeframes simultaneously. The perfect entry setup has 5 key components. 1. Initial pump with 3 times average volume. 2. Pullback that holds above previous support. 3. Declining sell pressure with increasing buy orders. 4. Holder count increasing during consolidation. 5. No single wallet holding more than 5% starting to dump. Never buy at psychological resistance levels like $1 million, $5 million, or $10 million market caps. These are major take-profit zones where early investors dump. Instead, wait for the pullback and consolidation. The best entries often come after a 40 to 60% drop from the peak, when weak hands have sold but strong holders remain. Volume analysis is crucial but misunderstood. Don't just look at total volume. Analyze the buy-sell ratio. Healthy accumulation shows lots of small buys with few large sells. Watch for what I call smart money signatures. Consistent buying in small amounts across multiple wallets. Chart patterns work differently from meme coins. Forget about head and shoulders or cup and handle patterns. Watch for what I call compression zones. Periods of tight consolidation with decreasing volume followed by a volume spike. These often precede major moves. Position sizing is part of chart analysis. Scale into positions based on volume confirmation. Start with 25% of your planned position at first entry. Add 25% more when volume confirms the trend. Add the final 50% when price breaks above the previous high with strong volume. Set your stops based on market structure, not arbitrary percentages. Place stops below the last significant low with high volume. This protects you from random wicks while keeping you in for the real moves. Trail your stop loss up as the price increases. For take profit levels, use market cap milestones rather than price levels. Take 25% profit when market cap doubles, another 25% at 5x, and let the rest ride with a trailing stop. This strategy lets you secure profits while staying in for potential massive gains. If you found this guide helpful, smash that like button and hit subscribe for more crypto gems like this.